There, folks. Happy Friday to you. I hope you had a fantastic week trading. What a week it was. Um, Very impressive bounce back after a very severe sell off. Who would have thought that this week would be the best week, I think, for the S&P 500 all year long? Um, for the last several weeks, I've been pounding the table on raising cash, locking in profits, and it's been a good position to be in. Last week, I actually over the last several weeks, I went from yellow caution flag to orange, and then last week I went to a red with a short bias, and that position or that philosophy worked for exactly one day, right? For Monday. You take some shorts. Now, listen, say, I did mention also that we can get some very severe snapbacks, and those are great for short-term trades. And I also mentioned the fact that you just don't want to buy into it because I think there's still a lot of uncertainty with the Brexit and how this will all play out. I think it will be months. I think it could be years before we know all the ramifications of exactly what Brexit means. We've got earnings season coming up in a week and a half. Uh, that will play a role in the markets and where we're headed. We have good, easy comps coming up, which is, we're in a very interesting spot. So for a lot of companies, you have fairly easy comparables coming up. But really, what people are going to be watching is top line revenue growth, and if revenue growth continues to, falter, that's going to be problematic, I think, for the markets. And if you start seeing a bunch of companies saying, "Oh, we've got to lower our guidance because of Brexit. We don't know how that's going to impact our earnings," and blah blah blah, that'll be also another red flag that I think people will get concerned about. But let's take a look at what happened, and I'll show you why it wasn't really that big of a shock that we got such a decent, or that we got a snapback in the markets. Let's just take a look at what happened. I mean, we wiped out $3 trillion worth of global wealth in 2 days. And we got completely out of the lower Bollinger Band in 2 days. Okay, and when you get completely out of the lower Bollinger Band, you get set up for a pretty nice potential snapback trading opportunity. What caught me off guard was the fact that it lasted for 4 days. Okay, and even today, if you read my blog, what I indicated was now that the month is over, it'll be interesting to see how the markets trade over the next several trading days now that we've started a new month. And I really did think that we might see more of a pullback in the markets as we closed in heading into a long holiday weekend where something could happen overseas that stuns the markets once again. So I was a little shocked that we held up as well as we did. But let's take a look at it. Nasdaq came up into the short-term trend, and we basically kind of pulled back a little bit from there. So to me, it wouldn't be a huge shocker if we were to pull back and maybe come down and test this 4,700, right? 4,700, 4,690, maybe fill this gap. And hopefully then this would act as support, right? And we wouldn't make a lower low. So that's what we need to watch for next week is whether or not, if we do pull back, which wouldn't be a big shock, do we hold there at the 4,700 mark and then just kind of bounce around in here and build up some energy before we try to take out that trend line? That's really kind of what I'm looking for next week. See if this 4,700 holds as support, or if we come back down and retest this 50 or 4,600. I had levels of potential support that I thought, we would kind of test it, maybe bounce a little bit, and then come back down, and then thinking maybe we'd come down and bounce around and then come down and test this. I mean, we just did it in 2 days. Boom, came down, tested it, and bounced right off of it. So let's see what the next week brings. I'm not convinced. I know there are a lot of savants out there on Twitter that knew exactly how this was going to trade, knew that Brexit was absolutely no big deal, and they were positioned and traded this thing perfectly. But That wasn't me. I really was a little bit shocked in what happened. I still have a good cash position. You would think maybe in a week like this, I must have deployed a bunch of cash and jumped into a bunch of swings and long-term holds. I did not. I do not trust this market yet. And until we break out of the range that we've been trading in for the last couple of years with real conviction, it would be difficult for me to get comfortable, taking a bunch of long positions here. The other thing I don't know if I already mentioned it, but this, potentially looking at a double top here on the NASDAQ. So let's see what happens next week. SMH did not have a very impressive day today. Looked like it was stalling out a little bit after we made that move up to 58, pulled back. It did participate in that bounce, but it's having a little bit of trouble here at 57. We'll see if this pulls back into this 55 area, if that can hold as support. If it doesn't hold this support, maybe we get another test of this trend line here. But SMH, I think, is still a little questionable. S&P 500, so, look, exactly like the NASDAQ, right? I mean, look, we got completely out of the lower Bollinger Band in 2 days. We had this nice push back up, came up into this trend line, and we pulled back a little bit. So would it be a big shock if we were to pull back and maybe test this 2040 area? That wouldn't be shocking to me. I could see us doing that and see if maybe 2040 holds as support. Let's take a look at the IBB, which actually was pretty impressive this week. So the IBB came down to this 240 area and found some support, right? This has been price support, bounced off that nicely. Now we're coming back up into price resistance at 264 or so. If we break over 264, I think we find resistance in the 272 area, which is where we found some resistance in the past. And then we've broken over that 272 and we bounce around in here, come up and test 289. That's where you need to see it take out 289, go up, test 300. But maybe a double top formation here in the IBB as well, right? So let's see what happens next week. Maybe we come up and test 272 and then pull back, or maybe this 264 will act as resistance. We'll see at the beginning of next week. But IBB had a nice little move this week. And look, if we get a continuation in IBB and you don't have any biotech names that you feel comfortable playing, you can always look at playing Labu, which is looking at a $31 roll, right? A nice round number roll. And, maybe we could see a breakout Labu head back up into, I don't think it's going to go up to 37, but maybe you can fill that gap somewhere around 34.40 or something like that. I think it's worth keeping an eye on Labu if we do get some follow through in the IBB. Let's take a look at the IWM, which basically came up into the 115 area. We've been watching that area, that price area, as support and resistance. We closed above 115, which was nice to see. But again, we did come up into the short-term trend line and pull back a little bit. So it wouldn't be a huge shock if maybe we came back, closed this gap on the daily and tested this 110, 111 as potential support. So, the concerning, I'm not going to say concerning, the interesting thing that happened this week, and I talked about gold and silver last week, which have been really impressive, but talked about, and I don't remember if I talked about silver in the market wrap or if I did it in the stocks to watch, but I mentioned 17 being a big area of potential resistance, and that if it took out 17, we could see a pretty impressive pop in silver. And why did we determine that? Well, we backed it out to the weekly, right? And on the weekly, that 17 area was a pretty big area of potential resistance, right? And we wound up taking it out very convincingly and got a really nice pop in silver. And listen, it does look as though maybe it's gone a little too parabolic here. Maybe you get a pullback in silver now. We pull back either close this gap down to 1780, or we could come back down and test 17 as potential support. What was resistance now becomes support. So that would be interesting to see what happens with silver. But it is a powerful, powerful move. And the thing about it is gold and silver are considered safety trades, right? Typically, when you're seeing these kinds of move in gold and silver, the markets are going down. We had the markets going up for 4 days, and guess what? Gold and silver continued to go up with the markets. And that is sending very mixed signals, right? What is gold and silver trying to tell us? So let's see what happens next week. But gold also had a very positive day, closed at the high of the day. Doesn't look nearly as parabolic as silver does. Actually looks like a pretty controlled move up. After some consolidation, we could see some move higher in gold. GDXJ, very impressive moves. GDX out of the upper Bollinger Band, so is GDXJ. Could we see a short-term pullback? Absolutely. Maybe we see a bounce in JDST or Dust. But look at JNUG. Unbelievable move out of the upper Bollinger Band. Nugget, same thing. Very big move out of the upper Bollinger Band. Could we get a short-term, near-term pullback in those? Absolutely. JDST and Dust could be two to keep an eye on if we do get a pullback. But the trend, I think, remains higher for gold and silver. I really do believe that it is trying to tell us something. So I have to be cautious with, you know what? And let's go take a look at the dollar. So, the big move down in the markets coincided with the dollar, right? We had a big spike in the dollar strength. And for the last 4 days, we've kind of settled down a bit, and we pulled back in the dollar. And I mean, look at this pennant formation flag on the dollar. So listen, it's holding this 95 area basically as support. If it breaks below 95, maybe the dollar strength, we see continuation of weakness in the dollar. But if this thing breaks, consolidates here for a bit over 95 and then breaks higher, I think you're going to see some pressure on the market. So you definitely want to keep an eye on dollar. USO. Let's take a look at oil, which, where are we at here? So we had, oil's consolidating, right? It is consolidating. It really is struggling with getting over $50 a barrel. And so we had the rig count come out today, and rigs went up, I think, by 10, which means more production. Maybe that's put some pressure on oil. It had a nice little pop in oil this week when we had a bigger than expected inventory drawdown, but now that we've added more rigs. So, we'll see what happens with oil. It is consolidating. It is an area to keep an eye on. But, let's look at the energy, XLE. So this is this kind of reminds me of what I was talking about with silver. This $69 area for the XLE seems like a significant area, right? We've pierced over it a couple of times and pulled back, wound up failing at this area. If we take out 69 with some real conviction, some high volume, maybe we go up and test somewhere around the 73 mark, then you're going to see some positive action, I think, in the energy names. But we could struggle here. We could pull back and potentially come back down and test this 64.50 area for the XLE. Let's take a look at financials, which, got clobbered from Brexit and did have a nice little bounce back. But, clearly this is a sector that I think you need to be cautious of. I don't think you want to start loading up with a bunch of swing and long-term holds in the financials. I think there's, still too many unknowns out there with what's going on over in the UK. Industrials, basically look like the S&P 500, look like the NASDAQ, right? They we had a bounce back up into this short-term trend line, and pulled back. So would it be a big shocker if we came back and maybe closed this gap, right, back to $54? I think that's reasonable to think that could happen. The other thing that was very shocking is utilities. Utilities are trading. I mean, this is a big old cup, right? Big old cup, a little handle and pop. Okay, that's great. Utilities are trading like, momentum stocks, and that really isn't what utilities are supposed to be, right? They're supposed to be kind of steady betties, and they really don't move all that much. They pay a nice dividend yield, but these utilities are getting a little wacky. So another safety trade, another mixed signal that's kind of being thrown out there that make me somewhat concerned and make me think that maybe this isn't over yet. I think we're getting ahead of ourselves by thinking the Brexit is no big deal. Metals and mining actually look really, really good. I mean, coming back up, and in this 25 spot seems to be a big spot, right? If you can take out 25.10 with conviction, I think you're going to see some more positive action in the miners. So worth keeping an eye on that sector. Retail actually, had an interesting. Could this be a double bottom setup? Maybe, I don't know. Possibly. I don't like trading retail personally. I've said it before, but interesting move in retail, but at an area of potential price resistance. Transportation had a nice little bounce, right, up into this trend line, just like the rest of them. We'll see if we can take this out. 44.50 or so seems to be an area of potential price resistance. If it takes that out, maybe we get some follow through in the transportation sector. Worth keeping an eye on. Healthcare also coming up into an area of potential price resistance up in this 72.50 area. If that could act as resistance, then we pull back down, maybe come down and test that 68.60 area because we've been bouncing around in that range for a while now. So, look, I'm still cautious on the markets. So maybe I'm not, red flagged bearish, but I'm moving it. I'll move it back to orange, but I remain very cautious of the markets, and I think next week could be pretty interesting. Really, what's going to matter is when earnings kick off next week, or in about a week and a half or so. That's what's really going to matter. That's what should move the markets. But I wouldn't be totally surprised if to see us pull back after that 4-day run. So that's where I'm at. So for the markets, see if there's anything else that was really sticking out to me. I think I pretty much covered everything. Oh, I will say this. They're also, EEM. So look at where the EEM's at, right? Very, had a nice pop back up to this area of potential price resistance around 35. The EWZ, I think, closed right at the high of the day, kind of broke out of a flat top breakout over 29. Interesting area, coming up into a potential area of price resistance. So emerging markets also are at very interesting levels. We'll see what happens over the weekend, but like I said, I am still cautious. I think there's going to be some great short-term trading opportunities. I'm going to be doing stocks to watch Sunday, 8 a.m. Vegas time, like I do every weekend. And there's a lot of stocks to go through for me this weekend. I think I'm going to have a pretty good list of stocks to watch for next weekend, or for next week. The stocks to watch this week actually did really well. There were some good moves in some of these stocks. PRTO, PPP, Tahoe, very nice move in some of the stocks that were on the list last week. And I'm sure we'll have a good list this week. If you can't make it, you have some stocks on your radar, send them to me. I'll do my best to get them on the list for review on Sunday. Okay? All right. If you can't make it Sunday, have a fantastic weekend. Be safe. Have a wonderful 4th of July. And I'll see you all next week.